Good morning, good afternoon, or good evening, whichever applies to you. Welcome to this presentation from the Melbourne Business Network. This is the first news update of the presentation Keeping Ahead in Uncertain Times. How is it all working? My name is Brian Jones from Ahead for Business, and we are members of the Melbourne Business Network. Just to give you an overview of what I'm going to talk about today, I'm going to talk about the mechanics of JobKeeper relief. Issues with payrolls, there's quite a few issues involved there. Revisiting business participants, the federal tax relief, which is actually happening already, and some reference to statistics provided by the Treasurer. And now for the disclaimer. I need to give you this disclaimer because this presentation is very general in content and may not be specific to individual needs. If you do need to follow up through any of these points, please go through your trusted advisor or perhaps a government department. And first up in the mechanics area, we're going to look at enrolment and enrolment dates. Enrolment is through the ATO website, and I would suggest that everyone goes and looks at that, even if they feel they are not eligible for JobKeeper relief, just in case. You can enrol for April and May up to the 31st of May. This is an extension of the original date. It was the 30th of April and it's been extended by a month. This is the only month where this will happen. In all other months, it'll be the end of the month close off for the enrolments, and there's no retrospective enrolments allowed. What must happen is for the month of April, employees have to be paid by May the 8th and have to have been paid a minimum of $1,500 per fortnight. It is not possible to say after May the 8th, I'm paying them in respect of April and get JobKeeper relief. You will not get JobKeeper relief. All employees have to have been employed at the 1st of March 2020. So it's not possible to engage somebody after that date and then claim job relief in respect of those employees. And that is understandable. If you are actually employing somebody, hiring somebody, why would you need JobKeeper relief? Once tested for turnover decline, which is 30% or more for people with turnovers below 1 billion, it is not necessary to retest. That means it may not apply to you in April, but it could apply to you in May. Once you've tested for the decline, then you're in the system for the whole period right up to the end of September. But you will have to prepare a monthly declaration for the ATO. The monthly declaration is not a retest of your turnover decline and will include things like changes to employees and reconfirm that employees are still employed. So there's bound to be some people who are terminated, there's bound to be some people who leave. This information will have to be given to the ATO. It also acts to reconfirm payment details. Where is the JobKeeper relief going to be paid? And they also ask for current and projected GST turnover, even though they are not going to retest you once you're in the system. And future enrolments, well, if you do not qualify in April and May, please continue to look to see if you do have a decline by more than 30%, because you could enroll in June, July, August, or September. So it's worth keep comparing your turnover with the prior year. Some indication of JobKeeper dates. There's a JobKeeper fortnight, and the next 3 fortnights are the 27th of April to the 10th of May, the 11th of May to the 24th of May, and from the 25th of May to the 7th of June. Employees must be paid by the last day of those fortnights. So the concessions that arose in April do not continue. They must be paid by the 10th of May, 24th of May, and the 7th of June. And an interesting question that has arisen is, what if the payroll cycle doesn't correspond to the JobKeeper cycles? And in many cases, it will not for many employers. But this is not necessary. If payroll cycles had to be changed to the JobKeeper dates, probably half the payroll administrators in Australia would probably resign because it would be a great headache. So it's only necessary to pay employees 1,500 within a JobKeeper fortnight. It is not necessary to change the payroll cycle. And if they are paid monthly, then it must correspond to 1,500 per fortnight. So very roughly, that's 3,000 per month. There are several issues that arise in relation to payrolls. It's very easy to say that JobKeeper relief is 1,500 per employee per fortnight. But first of all, you've got to select the eligible employees. Secondly, they must have been employed on the 1st of March 2020, so you can't hire somebody after that date and include them in the eligible employees for JobKeeper relief. Long-term casuals, for example, must have been employed for over 12 months, so information like the original hire date will be necessary. An employee, of course, must not earn less than 1,500 per fortnight. Employees who are on maternity leave and paternity leave are not included for JobKeeper relief. Employees who do not nominate to be part of the JobKeeper relief scheme are not included either. And there's one or two reasons why they would not nominate, one being that they are receiving JobKeeper relief through another employer. Each employee must have signed a nomination notice. Now, you imagine a payroll with several hundred people. Each employee has to sign a nomination notice. The logistics of doing that is quite difficult. And the single touch payroll system, at first instance, the ATO will know what is on your payroll, but they inevitably will need some adjusting. And of course, the major thing, everybody must be earning more than at least 1,500 or more than 1,500 to gain the JobKeeper relief. I'm going to revisit business participants in relation to JobKeeper relief. This is because I believe that there are a large number of business participants who do not actually realise that they qualify for JobKeeper relief. The categories of people are what may basically be called self-employed. So this includes sole traders, individual partners of a partnership, directors and shareholders of a company can also be included, adult beneficiaries of discretionary trusts, and adult beneficiaries of a unit trust. The same turnover tests apply as to all other businesses, but it's very important to keep checking if the turnover has fallen by more than 30% on the comparative basis. There is one important part of business participants' JobKeeper relief. Only one business participant can claim for JobKeeper relief. So therefore, only one partner of a partnership can claim. So if it's a partnership of 2 people, one partner can claim. If it's a partnership of 5 people, one person can claim. And another key thing that may arise, some people who are self-employed may say, I don't earn more than 15. I don't earn as much as 1,500 per fortnight. But it is not necessary to demonstrate that a business participant actually earns 1,500 per fortnight because they are paid in different ways. Now also to revisit alternative decline tests. Now there are lots of reasons why an alternative test may be necessary. The prime test is a comparison of the period in 2020 compared to the same period in 2019. But there's lots of reasons why that will not give a relevant result. One reason is a business has not been in existence for more than 12 months. So there's special provisions for those types of businesses. But what is quite interesting is some of the specific things that may happen. And one of those that's come to light is the Townsville floods of 2019. In 2019, the Townsville floods at some stage corresponded to the coronavirus period in 2020. That means that looking at turnover in 2019 and compared to 2020, you'll be looking at a period in time where there was a decline already in 2019 versus a decline in 2020. You would get a rather strange result. So special provision has been made for people in that situation. JobKeeper relief and other measures were quite hurriedly brought into practice, and for obvious reasons, but inevitably some modifications were necessary, and a lot of these were actually announced on the 24th of April. These include a number of different items. If they do apply to you, you should look at them carefully. But specifically, they are to do with groups and employer hire companies. There's provision for looking at the turnover university in a different way. Items that relate to various charities, age groups, especially 16 and 17-year-olds, religious practitioners, and also it is very important if you're a business participant that you must demonstrate a substantial decline in your turnover. Now, revisiting some of the cash assistance relief that the federal government has introduced, key area of this is the PAYG withholding relief. So small to medium-sized businesses and not-for-profit entities with a turnover of less than 50 million that employ staff can be eligible to a payment of up to 100,000. This is split between a maximum of 50,000 at stage 1 and 2 lots of a maximum of 25,000 at stage 2. The employers must have been employers before the 12th of March 2020. The minimum payment is 20,000, and the measures are subject to what's called the specific integrity rule, which basically means there must be no contrived reasons for gaining the relief. The stage 1 payment relates to the March month. 3 times that amount will be given, 3 times the PAYG withholding amount will be given, or 10,000 if it is less than 10,000. So 10,000 is the minimum payment that can be made. So if you had PAYG withholding of say 2,000 in March, 3 times that is 6,000. That's what you'd normally get, but the minimum is 10,000. So even if it's only 6,000, you will get 10,000. So this very much helps small business payrolls. Now the stage 2 payments depend on whether you're monthly or quarterly lodgers. Quarterly lodgers will get 50% of stage 1 payment for the quarters ending the 30th of June 2020 and the 30th of September 2020. So if you were on the minimum 10,000, you would receive 5,000 at the end of June and 5,000 in September. If you are monthly lodgers, you would receive 4 payments, a quarter of the original stage 1 payment. So assume that was 10,000, you would actually receive 2,500 for June, July, August and September. Now these aren't direct cash payments. These are actually posted to the integrated account of the business. And if that turns the balance of the integrated account into a credit due to the taxpayer, that will be refunded to the taxpayer. Again, just revisiting an important area, wage subsidies for apprentices and trainees. You can see why the government was probably concerned about this area to avoid disruption of apprenticeships and traineeships. It relates to employers with less than 20 employees who retain their apprentices and trainees, and they were in training again at the 1st of March 2020. They may be entitled to a wages subsidy which is equal to 50% of wages paid, and that runs for 9 months from the 1st of January 2020 to the 30th of September 2020, but has a maximum subsidy of 21,000. Registration has already started in April 2020, but final claims can be made right the way up to the end of the year, 31st of December. It is necessary to get an eligibility assessment from an Australian apprenticeship support network to ensure the subsidy is allowed. Now some other important federal government cash flow measures. The first one is the instant write-off of assets in the year acquired. This has been in existence for some years, and before the actual current crisis, the threshold for the write-off was 30,000. That meant that an individual asset up to the value of 30,000, new or second-hand, could be written off, reducing the tax liability. From the 12th of March 2020 until the 30th of June 2020, that instant asset write-off is hiked right up to 150,000. So this means that any business that needs to buy assets can get an immediate write-off up to 150,000 for one individual asset up to the 30th of June 2020. But beware, motor vehicles are subject to a luxury car limit of just over 57,000. The instant write-off for a motor vehicle will not exceed just over 57,000. In terms of the eligibility on turnover, it used to be for businesses for turnovers of under 50 million, but for this period, the aggregated turnover will be hiked up to 500 million. So businesses right up to 500 million turnover will be able to claim this instant write-off concession. Businesses with a turnover of 500 million or more will not be eligible to use this instant asset write-off. In another measure concerning accessing funds from superannuation funds, it's possible now to withdraw 10,000 from a super fund in 2019-2020 and 10,000 in 2020-2021 without a condition of release. A condition of release, there are quite a few of these, but a most obvious one is reaching age 65, which is an automatic condition of release. But now any age group can access 10,000. So it is possible to actually take 10,000 out of the super fund on the 30th of June 2020, and then the following day take out another 10,000 because that will be the 1st of July, and that will be in the 2020-2021 financial year. The key thing is both of these issues need to be addressed before the 30th of June. There is no budget in May this year. It is likely that the budget will take place in November 2020. But on May the 8th, the Treasurer did actually produce a report on the economy effectively. The government estimates that job losses to date because of the crisis and the lockdown is something like 600,000. So it just shows you the scale of what's going on. The underlying cash deficit is 10 billion higher than forecast. So these are quite staggering numbers. Tax receipts are down 11.3 billion over the forecast. The International Monetary Fund is predicting the world economy will contract by 3% this year. And just to put this in perspective, by comparison, there was a global contraction of 0.1% in 2019 during the global financial crisis. Now, Australia was not as heavily hit as many other countries in the world, but the scale of the problem can perhaps be inferred from those two percentages. In Australia, household investment has dropped 16%, business investment has dropped 18%, and also at 80%, dwelling investment has dropped. Household savings, surprisingly, have increased as more people stay at home and are more cautious in their spending. But the March business confidence indicator is the lowest it's ever been. And this probably tells us a lot about the state of the economy that's been created by the lockdown and the crisis. The measures currently go through to the end of September, but it is quite likely that we'll see new announcements later on in the year for further economic measures. And now some links that you may find useful. There's a lot of information available, of course, on the ATO site, which is www.ato.gov.au/general/COVID-19. You'll also find some useful information on the federal Treasury site, www.treasury.gov.au/coronavirus. And for state-specific measures, you can look at the State Revenue Office's website, www.sro.vic.gov.au. And of course, you can always ask questions to the Melbourne Business Network, and you can address those questions by email to admin@melbournebusinessnetwork.org.au, and we will guarantee to answer those questions within between 24 to 48 hours. And I thank you for attending this presentation today.